Namaskar and welcome to our commodities podcast. I'm Ravindra Rao from Kotak Securities Commodity Research Desk, and as always, we will highlight key developments to keep an eye on the current week. Financial markets experienced a roller coaster ride over the past week with several factors influencing investor sentiment. The escalation of the conflict between Israel and Hamas had a significant impact on market dynamics, causing fluctuations in various asset classes. On the other hand, a less hawkish commentary from several Federal Reserve officials provided a degree of cushion to the markets. Volatility heightened, particularly in the latter part of the week when an unexpected increase in US CPI raised concerns about Federal Reserve's interest rate policies. The US CPI data revealed a month on month increase of 0.4%, surpassing expectation, and a year on year increase of 3.7%, slightly above the forecast of 3.6%. This increase was primarily driven by a notable acceleration in shelter costs, which account for approximately one third of the CPI's overall weighting. Core CPI, which excludes volatile food and energy prices, mirrored expectation with a 0.3% monthly increase and a 4.1% annual increase. This data indicated that while headline CPI figures exceeded levels observed in June and July, core CPI exhibited its slowest pace of growth in nearly 2 years. Earlier in the week, in the previous week, markets reacted positively to a series of dovish remarks from Federal Reserve officials. The release of FOMC meeting minutes also contributed to a more tempered market outlook, signaling that the tightening of financial condition in the United States may have reached its peak. The US dollar experienced a pullback from its recent 10-month high of 107.35, but it managed to rebound as a result of better than expected economic data and the risk off sentiment prevailing in the global markets. The news of Israel preparing for a potential ground invasion of Gaza further supported the US dollar status as a safe haven currency. On the commodities front, COMEX Gold prices made significant gains, making a weekly increase of approximately 3%. This surge, the most substantial since March, was driven by safe haven buying amid the worsening conflict between Israel and Hamas. Silver also benefited from these safe haven flows, with its prices rising by around 5%. However, the gains in silver were somewhat limited due to softer performance of base metals. WTI crude oil experienced a weekly closure with more than 5% gain, largely attributed to Israel's military directive to United Nations calling for the evacuation of 1.1 million residents in North Gaza with a tight 24-hour time frame. The United Nations had expressed the difficulty of carrying out such an evacuation without significant humanitarian consequences. This development undermined earlier expectations that conflict would remain contained and intensified concerns about destabilization in the Middle East. As a result, fears of global supply tightness added to the demand for crude oil. Notably, OPEC anticipates a record oil supply deficit for the current quarter, with global inventories projected to decline by around 3 million barrels per day. In contrast, LME-based metals extended their recent declines, influenced by a combination of factors. While there was initial optimism that China might introduce additional stimulus measures in response to the worsening real estate crisis, this was counterbalanced by indications of China's fragile economic momentum. Recent figures from China's consumer price index and producer price index pointed towards the risk of deflation. Additionally, investors were assessing the latest measures taken by China to close regulatory gaps in the struggling stock market in an effort to boost investor confidence. Looking ahead in the week, financial markets will closely watch a series of speeches by Federal Reserve officials with particular attention on the remarks of Fed Chair Jerome Powell. In addition, the release of US retail sales and industrial production data will provide insights into the domestic landscape. Chinese economic indicators such as GDP, fixed asset investment, and retail sales data will be crucial in gauging the health of the world's second largest economy. Considering the ongoing geopolitical tensions in the Middle East and diminishing prospects of another Federal Reserve rate hike, the price of precious metals are expected to remain well supported in the short term, driven by safe haven buying. Regarding price action, COMEX Gold has crossed above the 200-day simple moving average, indicating strength on the part of the bulls. It is also in close proximity to the resistance of a falling channel situated near $19.68 per troy ounce. If the bulls manage to maintain a weekly closing price about $19.68 per troy ounce, further upside potential may become evident, potentially propelling gold beyond $2,000 per troy ounce mark. A similar dynamic could be observed in the case of crude oil, which might experience a swift surge if the Middle East conflict escalates. Nevertheless, market participants should exercise caution as the current premiums associated with precious metals and crude oil are vulnerable to erosion in the event of a resolution or de escalation in geopolitical tensions. We appreciate your listenership and may your trading endeavors be prosperous and rewarding. Thank you for tuning in.